Fire it up.
Yes, sir. All right. Looks like we're live here. So just want to welcome everyone to the live stream. Today we have on Russ from Dapper Dividends to just talk investing. And just go ahead and introduce yourself however you like.
Oh, baby. And can we talk investing? I'm ready to talk and talk some more. So, I thought it'd be interesting that I don't believe, and correct me if I'm wrong, has anyone ever started off your live stream with playing a game, two truths
No.
and a lie? Yeah. So I thought it might be a little fun icebreaker. This is the first time I'm talking to Frank live, by the way. And to all of you, thanks for tuning on in. So here's how it's going to go. I'm going to make 3 statements. One of them is going to be a lie. 2 of them are going to be true. So statement number 1 is that I met my wife at about 3 a.m. at a goth bar. I had no money. It was on a dance floor. I was by myself, and it was before ATMs were in bars. So I had no money, and I bought her a glass of water, which was free. That's number 1. Second one is that when I got back from the Navy, I was playing guitar in a band called Don't Look Down. Had to change their name. Now they're called Much the Same. And I knew the singer from high school, but we're all Chicago kids here, and they knew the guys from Rise Against. So in the Give It All video, which was like their big hit song, they invited a bunch of us to go on the L while they played the L Train. So in the Give It All video, you can see me in that video. And the third one is that I delivered a baby completely and utterly unexpected and unprepared. So which one of those, Frank, is the lie?
Well, I would say the second one, you had a lot of detail there, and there was like a lot to the story, so that one definitely seems like it probably happened. And then the first one seems plausible to me, but I'll just say I think the first one's a lie.
It was the middle one. It was the one you started with.
Really?
Yeah, I was never in a band.
Okay.
To this day, I've played just with people in garages and stuff, messed around. But yeah,
I was just like a lot of detail and layer to the story, I guess.
That's why I thought you got it. I thought you were going to pick it out. But no, I do know all those, I did know those guys, and I wasn't in the video, unfortunately. But and then I delivered my daughter. It was completely unprepared. My second daughter, number 2. And it's because of her I had a vasectomy. So no more kids. She was the last one. And now all of you know my deep, dark, dirty secrets. And so with that being said, my name is Russ. I do have a little old YouTube channel called Dapper Dividends. Well, it's changed a little bit. Now it's Russ Knopf's Dapper Dividends because I don't know. I'm still working with them. Eventually might drop the Dapper Dividends because that's just something when we're in lockdown, and I, like a lot of people, started creating content, and I just picked that name in like 2 seconds just because nobody else had it. So I have the YouTube channel, which we're all trying to grow and work on. I have a podcast that I also do as well. And the podcast is a little more loosey-goosey, a little bit more just me being crazy me and still trying to give some value. I am, 44 years old. I don't want to go too deep here, but yeah, I'm 44. I'm not going to start. I was born on a Wednesday, April 20th, 1978. It was a cold April morning. No. So, I'm here in Chicago, born and raised, except for my time that I was in the United States Navy and lower middle class. My father left when I was less than a year old. So basically broken home. My grandfather was into stocks and stuff, but never really taught me anything about investing and about stocks. So that all came much later, and I wish I could go back in time, which obviously we can't, because I'd love to pick his brain on just what he looked at. He did it old school. It was before phones. Every morning I would watch him look at the newspaper and check what the stocks did. And then he would watch the news at night just to see if there was any big news that they would report. But it's not like today where it's just hyper to the minute, to the moment.
Yeah.
And I think it can be worse on some people because we're seeing this stuff constantly. Like me, I'm an addict. I constantly, from pre-market till post-market, I'm constantly checking stock prices, and not because, I'm trading, but I just like to know what's going on, and I like to see their movement. And it's kind of like a sport for me and a lot of us. I mean, I really enjoy it. And a little bit about me. I have my wife that I met when I was 22. I have 2 daughters one of them's just about to start freshman year in high school, which for me is kind of crazy now that I am entering the phase of my life that I am a father of a teenager. That's in high school, mind you. So, so that's kind of the rough sketch outline of the familial life, so to speak. But as far as, I don't know, you just want to go right into investing, or hit me with some questions. What do you want to know?
Yeah, I thought it was interesting what you were saying about your grandfather, like being into stocks and just like how different it was. And obviously there was like commissions and stuff like that. And I don't know, that's just like a foreign concept per se to me, to have like commissions of like $5, $10, $20 on a trade or something like that, and I don't know, it's just interesting how the world changes, I think. But
yeah, man. So when I got back from the Navy, I got home in 99, in the fall of 1999, right before the dot-com bust. But I knew a lot of people. In particular, I always talk about my uncle's good friend. He quit his job to day trade because that's how crazy it was. You just buy tech stocks and you make money, and it worked until it didn't. And then I had another buddy who kept trying to get me to buy stocks. I kept remembering, I think it was Scottrade. I don't remember what he said, but anyway, I didn't like the sound of it, that I had to pay money to, place the trade, and then the other way coming back. So it was like, I was already looking at it. I was starting down, but I don't remember exactly how much it was. Might've been 10, 15, $20. 1999 sounds right. Maybe like Scottrade or something like that. But yeah, the dot-com crash happened. So I lived through that, even though I wasn't trading. I remember a lot of people being bummed out. I remember it being on the news. Of course, I was 21 at the time, 21, 22-ish. And obviously I was having fun being a young 21-year-old in a big city like Chicago, and happy to be home from the Navy. But yeah, my grandfather, he didn't really trade. He would just, I remember, save up chunks of money. Is that the way they used to do it? Because I think back in the day, you had to do it in chunks of 100. I believe it was 100 share chunks that you had to buy stocks in. So it kind of eliminated some people from doing like outright investing. So I remember he did a lot of mutual fund investing, but he did invest. I always remember talking about, he started funds, portfolios for myself and my half brothers. They were like, he would put just Walmart, Disney, Coca-Cola, even the big ones back then. So kind of like just the safe blue chip stocks. He unfortunately didn't buy any Apple or anything like that, but it still was good. I think I had, when he died and he left it to me, I think I had like $4,000 or so, and I used that to put for a down payment on my first condo. So I'm in the house now. Theoretically, that money is still kicking around that he started back then. So I think that's kind of cool. And that's kind of what I'm trying to do, is build like a generational financial legacy for my kids and beyond. And just, helping people that way, that are not around yet, even people I haven't even met yet, because they probably haven't come into this plane of existence. But that's a roundabout way of me just going off the rails. So bring it back home, Frank. What do you want to talk about next?
I guess just walk through like how you got started investing, what you heard about it, kind of just what got you into that process, got you interested in the first place.
Yeah. So it's an interesting story. Penny stocks, that's what started it. I had invested.
That sounds familiar.
I'm sure it's probably many people. That's the start.
Yeah.
So exactly. I had, going back to my grandfather, I remember him investing in like mutual funds. And I had been doing that through my work, through the 401k, really didn't pay that much attention. Whatever my money was going into for years, it just kept going into those things, kind of like just blind investing, I guess. And yeah, again, you always wish you could go back and do things differently. I wish I could have put more money in. I wish it could have been baller. I wish it could have been. You won't get that. I might see. I started going into the skilo. I wish it was taller. I wish it was baller. I wish I had a girl that would call her. And then my brain said, no, you got to stop it because that's like MTV Raps era, like late 90s. So some of my references can be lost on people. And that's when I mess up because my brain tries to, put the clamp down on the mouth. But anyway, so shout out to Skilo if he's still around. And investing this. So where did I get my start? I got my start from penny stocks. I wanted to start taking a little bit more, I thought maybe I could learn investing, and I had started playing fantasy football, dynasty fantasy football, and did pretty good. I was like, okay, I learned this. I made money. So I'm going to learn this stock thing out. Like I'm going to trade penny stocks, and then, I'll probably get good at it and I can quit my job. So started looking for a platform. This was like late 2017. And I remember Googling free stock trading because I had no idea. I didn't want to pay commission anymore, or not anymore. I didn't want to pay commission because I remember people paying commission. And I came upon Robinhood. So found Robinhood and just started making every mistake in the book that most young investors do. I didn't want to buy I remember looking because of my grandpa with Walmart, with Disney. And I was thinking like, man, these are like almost $100 a share and more. I thought, dude, that's way expensive. I don't know. And then you'd see like, I think LEE, ticker LEE was my first penny stock purchase. And I want to say they were like newspaper publishing or something. I probably should have Googled that, but they were my first. Didn't go so well. And then I kept trying it again. I found StockTwits, by the way. I don't know if you're familiar with StockTwits.
Yeah, I'm familiar with it. I don't really go on there or anything.
It's a playground for degenerates. It's like high school. Yeah. It's like being with a bunch of, half naked girls and, fart jokes and stuff on top of like stock information. But I kind of find it entertaining now, but I had found StockTwits, and because it was like Twitter for stocks, I didn't really want to get on Twitter, even though I had an account. At the time, it was dead. It was dormant. It wasn't being used. Eventually, I blew the dust off that baby and started, actually, it got hacked. There was some like porn adult thing using my Twitter, and I went on it, and there was all these like tweets, like, click this link and girls and whatnot. So I was able to delete those and change the password and all that, which was strange. But StockTwits found people that would just talk about penny stocks, and everyone, got to get like total pump and dumps. And I always got in on the upper floor of the pump, and then I would hold it through the dump. Found out I was really good at holding. I had a lot of trouble selling. I didn't like to sell stocks. But buying was super simple, man. I'll buy anything. You just give me the wink and the nod and tell me why it's going to go up. I'll put money on it. And that didn't work out so well. So I wanted to shift away from penny stocks, and I found Udemy, learning. So I took some classes on swing trading because I thought, okay, that this might be a little better. And I kind of did, a little better employing some of the rules that we learned in some of the courses I took, but no, I just would break the rules ultimately, and I would just keep holding things. And I came upon NIO, the electric car company, in September of 2018 when they IPO'd, and I put a few $100, which at the time was a lot for me, on NIO because I thought, oh, cool, like kind of like Tesla, but they were saying it was the Tesla of China. And it just started going down. I kept pumping more money into NIO. It would go down. I'd buy more, average down. And I kept saying like, all right, so when this baby goes up, I'm going to sell and I'm going to get my money back. Well, it didn't go up, and I eventually got 100 shares of it. But I was at one point down like 94% on NIO. And it was at that point that here in the United States, for all our international viewers, the pre-market It starts trading at 4:30 a.m. I believe it's 4:30. It's been a while since I looked, but I think it's 4:30 a.m. 4 or 4:30. So I would have trouble falling asleep because I was so nervous. Like I put more money in that day, and I was like, all right, tomorrow it's going to pop. I'm going to get the money back. And I would have trouble falling asleep. Bad sleep. I would wake up, start checking the phone. There I am, my wife's sleeping next to me at 4:30, 5 o'clock in the morning, just looking at pre-market, just like willing Neo to go up so I could get my money back. And it was after about 3 nights of this, and I was just really tired throughout the day and grouchy, not myself. And one of those mornings when I woke up looking at it, and I was like, this can't go on in perpetuity. Like, I cannot just keep losing sleep. I'm going to die if I keep, either I got to quit investing or there's got to be a different way. And I remembered my grandpa. Maybe it was, divine intervention or whatnot, but I remember him talking about Walmart one time and saying Walmart is a good dividend company. So I really didn't know what dividends were. I'd heard things pay dividends, but so I Googled dividend stocks, and that just, Alice meet the rabbit hole. Down I went and just started every day. I mean, just kept growing on me. And it took a minute to click because the first dividend I bought was AT&T. And at the time, I think they were like 39 cents a share per quarter, 38, 39 cents, something like that. And I remember I bought like 5 or 6 shares, and I was like, so I got to wait 90 days to be able to get this, paltry sum of like a couple bucks. This is crazy. I was like, I could just make a swing trade and get that in like, a day or a couple hours. And I ended up selling AT&T and still tried more swing trading. But I think it was Merck. See how your brain, the details get fuzzy when you get older. But I believe it was Merck. I was in on a swing trade, and I had sold them. And I sold the position, but it was apparently after the ex-dividend date, which is the day that you have to own the stock on. You can't buy it on that day. You have to own it the day before in order to qualify for the dividend. So I knew nothing about that. And all of a sudden, I remember on Robinhood, one day it said, whatever, Merck dividend, a few bucks. And I was like, oh yeah, like the dividends, that's right. And I had sold it. So I was like, huh. So then I just started, one thing led to another, just started researching it more. And I thought, this gives me a lot less heartburn that I'm just getting paid to do nothing and hold these stocks. So I said, well, what if I just buy really good companies and I never sell them and I keep adding to them? Then I'm just going to keep getting growing streams of income. And then of course, books, podcasts, YouTube. I don't think I took a dividend course on Udemy. No, but just with all that. So that was late 2018, early 2019 that I really got into it and spent all of 2019. And then obviously up until 2020 when I was like, you know what? Oh, Ian Lopik. That's who I found. We all love Ian Lopik. Shout out to the man. I can't believe I haven't mentioned him this far. But yeah, Ian Lopik, the man, he's the one that I really, really gravitated toward when I found his channel. It was just like the light bulb went on, and I was like, you know what, this is for me, because he's talking about buying, never selling. Like his time frame is like Warren Buffett, forever, obviously with the caveat because things do change. But yeah, so then I remember thinking like, well, Ian Lopik, like this is crazy. So he's getting a few bucks talking about dividend stocks. So there you go. That's how I ended up starting Dapper Dividends. I thought, well, I'm going to talk about dividend stocks too. And YouTube has been a humbling journey to say the least. I have I think around 450 videos. And I would say probably 400 of them are really bad and not really something I'm proud of putting up. So that's been a lesson. And, I wanted to start the channel to talk about dividends and dividend investing. And before long, I think my second video, our toilet backed up and I had to rod the drain out. So I had my wife film me and I was showing the viewer how I'm rodding out my toilet. I look back now, I'm like, if I didn't know me, why the hell would I watch that? I want to hear about dividends. I don't give a care about some schlub that's rotting out his toilet, So it's funny, you look back, but in the moment I was like, oh, there's probably some people that are going to find this useful or helpful.
Yeah.
And that didn't work out so well. But, now I've been recommitting, on my banner, it says dividends period. And of course, like 3 videos ago, I was so upset about Celsius, the crypto firm that's gone bankrupt, where I have like 75-80% of my crypto app. That's probably going to be completely lost in all likelihood. And I did a video on it. And then that was kind of the one on the next podcast. I was like, you know what? I lost like 6 subscribers after I put that. And I don't blame them because, dude, it's supposed to be a dividend investing channel. And there I am again talking about crypto. So, that's kind of the point, long way, to go ahead.
At that point, that's kind of like, I think maybe where it makes more sense to, change your channel name to just be your name, because then it's not as dividend focused, but it definitely helps to have like a really like direct focus to the channel as well. So I definitely struggle with the same thing of like just wanting to like talk about things that I think are interesting, but also have like a focus for the channel too. It's like,
yeah, take it from me, man. I've found out the hard way. Believe me, 450 videos in, I've found out the hard way that you have to have that specific audience that you want to talk to. And for me, my first passion to get the whole thing kicked off was dividend investing. So that's what it is now. That's what I'm going to stick with. And every time I get that little itch, like, I should talk now, unless if it's not, dividends from an ETF or stocks, I'm not going to talk about it. The bubbly, man. Sorry. It's a problem drinking carbonated stuff. Set that over there for a minute.
Yeah.
What's up? How's it going, man? I'm rattling on here. How old are you? I don't even know.
I'm 20.
Get out of here, dude. 20?
Yeah.
Man, if I could go back to be 20. Yeah, when I was there you go. When I was your age, I was in the Navy. I was on board the USS John C. Stennis CVN 74, which I think I'm going to replace this guy with back here, Ben Franklin. I have a problem because my camera has the autofocus. And if I move around, it'll focus on him. So half the time, there we go. Half the time I'm fighting with this guy. So I think I'm going to get rid of it. I'm going to put it in the garage or something. But dude, 20, that is outstanding. Look at, you're investing. You've got a YouTube channel. And you're so far ahead of the game just talking about personal finance. Come on. Pat yourself on the back, man.
It's a long game, and I guess it helps to start a little bit earlier, but
a little bit. No, it helps a lot. It's a monumental helps to start earlier. I got my daughters invested. I started portfolios for them. So the stimmy checks, we're getting the stimmy checks. Thankfully I'm at a position where we don't need that money to eat. I didn't want the money. I didn't ask for it. We did donate a portion of it to charity, but the rest of it, so all of their stimmy checks, I opened up Schwab accounts for them. And, again, some protestation from them. They didn't really want, they don't really get it yet. They still don't. They're teenage girls. But I wish. I told them, I'm like, dude, if you talked investing, you'd probably get featured on CNBC. Like, people love feature stories about young people and young females. I'm like, they don't care. Yeah. They don't want to hear it. But I let them pick. I pre-selected I think it was maybe like 15 dividend stocks that I was okay with, and said, okay, so you're going to pick several of these to put your money in. And, just the usual suspects, they got McDonald's, Coca-Cola, PepsiCo. My one daughter did want Tesla, so she has some Tesla, which I think that's her best performing stock, oddly enough. The one likes Dr. Pepper, so we got her Keurig Dr. Pepper. The kids love Cheez-Its. Do you eat Cheez-Its?
Not really, no.
Yeah, Kellogg's makes Cheez-Its.
Okay, I didn't know
my family is basically helping to support and sustain Kellogg and their dividend by the amount of Cheez-Its that we consume through this house. We buy them by the truckload. It's absolutely insane. But so Kellogg, so at least I told them, when we go buy Kellogg, you're getting an itty bitty teeny tiny portion of that back in the form of a dividend. So I think just the fact that they know what dividends are is going to help them in the future, because so many kids their age, especially girls, probably couldn't even begin to explain what a dividend is. So at least my girls can say, which I think one of them's walking there and they won't. Who's over there? Oh, it's just my wife. You want to say hello?
It's just my wife.
I don't know if she will. Let's see. Anyway, I'm talking to Frank. We're live on the internet. The whole world's here. Here, look, this is my wife.
Hey.
Hello.
Yeah.
I would wave, but I got waters in my hands.
So anyway, I thought it was one of my daughters. I was telling them the story. Yeah, so they at least know that there's companies that bring in money, and some companies return a portion of that money in the form of a dividend. I didn't even know that till I was, probably in my 30s. I mean, not like I know it or like they know it or they've had it explained to them. So, and the fact that you know it is huge, man. That compounding is massive.
Yeah, I think it's definitely like, even if they don't have like a super great understanding of it, you're starting to like put those seeds in their heads, and eventually it'll probably sprout a little bit.
Yeah, so my oldest one, she got a graduation card just recently, the one that's going into so my daughters are 15 months apart. The one is going into freshman year in high school and the other one's going into 8th grade. So my daughter got $10 from a family friend, and she gave it to me, and I said, "Oh, good. Well, now we're going to invest this and you can pick it." And the younger one said, she said, "Oh, you messed up." She's like, "You gave it to Dad. Now he's going to invest it. You just lost that money." You know what I mean?
Yeah.
It's like, "You fool. You gave it to Dad. Now he's going to invest it for you." And I was like, "Yeah, guilty. I'm going to turn that $10 into like $100 in 15 years for you. I'm sorry." So.
Yeah.
But yeah, so yeah. I'm hoping it clicks one day. I'm hoping they understand it. And even if they don't, we're still going to have these accounts for them that are, not much. They're bringing in like $15 a year in Paddy and provide in projected annual dividend income. So it's good. You got to teach the younger kids. And I wish I would have done it sooner. I invested in a 529 for them. I started that when I found out we were pregnant with my first daughter. I just started saving like $50 a week or a month. I don't remember what it was, but it's grown pretty sizable, and I've done that for the both of them. So, yeah, man, the kids.
Yeah, I think one thing we haven't really talked about, I guess, is your like goals. So, what was when you first started investing? Did you have really any goals, or were you just trying to like make some money? And
yeah, so
what were your thoughts there?
I probably should have mentioned my favorite quote that I have hanging up, and I look at it every morning and every night, every time I come in and out of the house. And it's, Big Warren B, the Oracle, is that if you don't find a way to make money while you sleep, you will work until you die. And that was probably the most important quote. I'm not at the point where I'm going to get it tattooed like on my chest yet or something like that. Maybe someday. But so that was like the main goal. Like that just really turned the light on, is that, yeah, if you don't save and invest, if you don't put some money away, you're literally going to work until you die. You will have no choice. So when I initially started, I had the lofty goal of passive income covering all of my expenses by my 50th birthday. Now I have 6 years, a little bit less than 6 years till that happens. Don't know if I'll be there, but just in the one account that I share, so this is 3 of them. 2 of them are retirement accounts. One's a Roth, one's a self-directed IRA, and one is the taxable brokerage account. So that one is at like almost $2,500. Excuse me. This bubbly. Somebody's got to get Ramon LaGuardia from PepsiCo, and he's the CEO, and tell him the bubbly's too bubbly. I got to get on the horn with him and let him know that. So the research and development crew has to funnel some more dollars into making the bubbly less bubbly. But anyway, so I share the taxable account on the channel, and that has been almost at $2,500 right now in annual dividend income. So even if I don't put another penny into that, I'm going to get $2,500 if all things remain equal and there's no cuts for doing nothing. And that's crazy because I immediately think like of the dividend income, just that buys. We're not even talking about like I joke that I let the dividends collect and then I cut them with new cash and then I target, allocate and redeploy into dividend stocks. But just by itself, $2,500-ish, like that's huge. That's huge. And even if I were to take that, that's bills, man. That's a mortgage payment and then some grocery bills if I wanted to just save the money, and not reinvest it. So the goals are to have as much passive income coming in, because when we have more money, like money's not going to make us happy, but what money is going to do is give us options. So I don't want to have money just for the sake of having money. I want to have money because I want to have options. And the more options we have, I think the happier we can be. Not the happier we will be, but the happier we can be. And that is one of my goals, is just to have as many options as I can so I can do what I want, when I want, with who I want, on my own terms, like that type of thing. And basically, I want work to be optional. So I guess if I were to have my adjusted goal from when I first started, it is to have work optional on my 50th birthday. And I may be there, meaning that if I wanted to quit what I'm doing, which by the way, I work in the commercial loading dock and industrial door sector, I wanted to say, here in the Chicagoland area. I've been doing that for 23 years now, which is insane to say I've been doing that longer than you've been alive, Frank. But it is what it is. I joked that I started doing that and I was going to do it until I figured out what I want to do. Well, things move quick. The money was pretty good. I was doing this when I started out. I was making more money than some of my friends that had a 4-year bachelor degree from like local community colleges. Plus they had the debt. And that blew my mind. So I like the work. I travel a lot. I drive a lot. And I thought, you know what, I'm going to do this till I figure out what I want to do. I was doing a lot of partying, a lot of late nights in Chicago, living for the weekend type thing. And then I met my wife, my girlfriend then. And, we had fun, then kids. And then once the kids come, the focus is all on them and like thinking about like my career goals or anyway, I was just working to work. You know what I mean? Like there was really no clear goal or end in sight. So what this has done to me is given me a clear goal that I have to work forward every day, which is just so, I don't know, man. It's just really cool and really, really, I don't know the word. I mean, every day I think about it. Every day I know that all the money I'm earning, like the money I earned today, a portion of it is going to go toward my retirement and giving me more options and hopefully having, my life be what I want it to be. Because like they say, if you don't define and work toward your goals and dreams, you will forever be helping to build somebody else's goals and dreams. I'm paraphrasing that quote, probably butchered it badly, but yeah, man, that's the goal, to have work be optional. And I guess barista fire, right? Like that's one of the ones they talk about where if I didn't want to do this, I wouldn't have to, but maybe I could just work at a Starbucks for 4 hours a day, just something to socialize, get out there and kind of have your healthcare covered. So that's kind of what I think as what I want to work forward and towards right now at this moment. Obviously, things change in the future. We don't know where we're going. We can't predict the future, but I don't know. You go ahead and say something, man.
I think one of the things I really liked that you said was about like happiness and that at a certain point it's more about having the options and it gives you the opportunity to be happy per se. And I think that's something that's really important for like, I guess, people that are in this like investment community, I guess, to keep in mind, because a lot of people might have the thought of like, oh, if I just get to this point, I'll be happy. Or if I just get to this portfolio value or dividends or whatever, I'll be happy. And I think you really have to look a little bit deeper than that. And I don't know the exact studies out there, but I know there's studies of like happiness versus like income and wealth, and like up to a certain point they're like very correlated because you're like worrying about your basic necessities. But once you have enough like wealth to not worry about that, then there's really no correlation between happiness and wealth, which I think is very interesting.
Well, I mean, if wealth equated happiness, you would never see a miserable or sad millionaire. You would never see a millionaire that killed themselves. Unfortunately, like that does happen. And yeah, man, it's just part of purpose, right? I mean, we have to have a purpose for the money. Otherwise, when you were talking, it reminded me of Phil Knight, the founder of Nike. And I read his book, Shoe Dog, fantastic book. And to sum it up, he basically said that there was so many dark days in Nike's history. There was times when he didn't know that Nike was going to be around in like 2 or 3 days. They were going to make it to the end of the week. But he just kept chugging along and figuring it out and taking risks, taking chances, doing what he had to do to keep it going just a little bit longer. So basically, is the way Phil Knight sums it up, is that, he got to the top of the mountain and there was nothing there. And he realized that the whole journey, everything was on the way up. And he almost wishes he could go back and do it again, because had he known that, he would enjoy like all those struggles, all those challenges, all the doubt. He would have enjoyed it more. So I think that's kind of cool to hear that from somebody that, is as successful as the Nike founder, Phil Knight. But again, man, it's just money does not equal happiness. And, it's a tool, right? It's a tool that can be used. Like I used tools today. I used channel lock pliers. I used a crescent wrench. I used the Sawzall. Like those things don't make me happy, but I could use them to build something that makes me happy. So yeah, money in and of itself is benign. It's neither good nor bad. It's not evil, but it can be used for good and bad, right? And
yeah,
I guess that's that's the whole thing. We got to give what we do purpose. And like I said, right now my purpose is to make work optional. So one day, hopefully sooner than a lot of the people that put me on the track, and through no fault of their own. Like I said, I look at myself as generational middle class, meaning that I was born middle class mindset. They told me, you get a good job, save 10% of your income, you retire at 65, you get your week vacation every year type thing. And that's, like I said, I live with my grandparents and they came up through the Depression. And that's just the way it was. There was never anybody telling me, like I tell my daughters, like, no, there's a different way. You can be your own boss. You don't have to work for somebody if you don't want to. That's completely up to you. Nobody ever told me that I could be my own boss or I could take a risk and do my own thing. So I think it's a good thing to have people understand that there's always another way, and kind of like makes you the captain of your own ship, man. You steer where you want your life to go. And a lot of people don't like to hear that, because like that saying, like, right, everywhere I go, there I am, meaning that no matter where you are, what position you find yourself in, it's because of you. It's your fault. And that can be sobering and empowering, because it means you can pull yourself out of it. You can change course. Like I said, I was on the Stennis. Well, we would chart out where we wanted to go. I mean, we didn't just pull out a port and just sail in any direction and drift aimlessly. So I think a lot of people are ships kind of drifting aimlessly. And, since I've become a dividend investor, it's definitely made me feel a lot more focused, because I'm working toward a specific thing. I should say I a lot, but my wife, we're both on board, and we're both doing what we have to do to try and help us get there, all things considered.
Yeah, that's awesome. So I guess we can get back to investing a little bit more.
Oh, Jesus. Yeah. What do you want to know? Hit it.
I guess so. When you're buying stocks, what decisions are you making like on a daily basis when you're choosing like what stocks to invest in and when? Like, do you kind of try to look at valuations and stuff like that, or are you just kind of like adding, stocks that you like? What's your kind of thought process, I guess, with that?
Well, first I want to say I just clicked on comments. It was on private chat, and I didn't realize all the people we had in here. So I thought I was just talking to you, Frank. I forgot that we had people dropping in. So double salute. What's up, everybody? So say that again. I'm sorry. I completely got lost. You got me. I was reading some of the guys that were. I see you talked to Ryan Williams. Yeah, everybody. Evaluations, right? You were saying what do I look at?
Like, what do you look at when you're making a decision what to buy?
Your message to Ryan says, and everybody's evaluations weren't just saying, but what do I look at?
Look at this.
Ready to send it?
It's sending a message to Ryan Williams. Yes, send to Ryan Williams. Dude, this is turning into a shit show.
And everybody's evaluations weren't just saying, but what do I look at?
Yes.
Ready to send it?
Yes.
Okay, it's sent.
There you go, buddy. Look at that. We just had Siri send a message to Ryan Williams. That was wild, huh? So he jumped on. Anyway, what do I look at? Well, there's a lot that I look at going into stocks. And, man, I'll try and boil it down to like some of the most basic stuff. I always want
you don't have to go super detailed.
Yeah. So we won't talk to like, enterprise value to EBITDA ratios and stuff. But no, like on a very basic level, I love to look at companies that have a dividend yield that is above their 5-year average. And that's kind of helping us know that something is, at least if not on sale, you're getting the dividend at a deal because it's above where it normally is, like that mean level. But price to earnings ratio, I like to see that below the 5-year level. Dividend growth history. How long have they been paying that dividend? What is the safety of it? So free cash flow payout ratio. I love free cash flow payout ratio over the earnings per share payout ratio, because earnings per share can be a really financially engineered and manipulated number. Just one simple fact. We all love to see share buybacks, right? We love companies that are buying back shares, but because now there's less shares to spread the earnings over, that means you could actually have stagnant or slightly decline. I sound like a snake there. You could have stagnant or slightly declining earnings, but if there's less shares to spread that out over, it's going to look like the earnings per share is going up. So just that one small example shows that that number can be manipulated. But if you have free cash flow, that is a lot harder to manipulate, unless, like my guys on the Dividend Talk channel point out, European Dividend Growth Investor, they point out how IBM is one of the companies that has adjusted free cash flow. I don't know how they get away with that, but most companies don't have that. And from what I understand is the free cash flow number is the hard, just money that's left over. And they can't manipulate that, because if they do, people are likely going to fall under the ever-present watchful eye of Sauron, aka the SEC, and people will go to jail and be punished. So I love looking at free cash flow ratio whenever possible, and just again I like to compare stocks to themselves and to other stocks in the sector that are similar. We're not going to compare Tesla and Apple, even though Apple wants to get into cars, which I think would be freaking cool. But also dividend yield. When I'm buying for yield, I've actually, again, shout out to Ryan Williams, got me turned on to Lowe's. So I kind of turn a blind eye if anything was under like 2% on the very low end. But what we really should look at is just companies that have really quick dividend growth. So I've really started to look more at like Lowe's. They have a really high dividend growth rate, really quick. So your money is going to grow much faster, or the dividends coming in, right? When you buy that share at that yield, you're locking in that as your yield on cost. So when they start increasing it and giving those nice raises like companies tend to do, which by the way, Ford, I saw increase their dividend 50% today, bringing it back up to pre-pandemic levels. But Charles Schwab
had really good earnings.
Yeah, they're coming for Tesla, man. Tesla's got competition coming.
Yeah.
But so I lost my train of thought. I
Sorry,
just
I
started
interrupted
thinking of
you.
dividend hikes like Charles Schwab popped in my mind. I think 10%
Yeah.
raise from Charles Schwab, which they're making money off me from my options trades. Every time I sell an options contract, it costs 65 cents, which is really nothing when you're doing $100 contract. 65 cents is, and they have a great platform. What is your favorite platform to use? What do you use to invest in? If
I
you
would
want to
say
disclose it.
probably Fidelity is my favorite at this point. I definitely, I guess, it's probably not the largest the total assets in Fidelity accounts is probably not the largest across my
Right.
investments. I'm not sure, but it's the one I definitely use the most and kind of in the most. Is I don't know. It's not doesn't have any crazy great features or anything, but it's just really solid. And especially when I've talked to customer support, usually it's been super quick to get hold of them.
Yeah,
So
that's wild, isn't it? Customer
something that I like.
support. Yeah, when I switched to Schwab, man, I love that just that awesome. You can call the number and you're talking to a live human being within a few minutes, and they're
Yeah.
knowledgeable. They take care of stuff. But dude, when I was on Robinhood, it's really slick and sleek, and they really
Yeah.
preyed on that psychological aspect when you see the confetti and you just see just things moving. They gamified. For better or worse, they got a lot of people in the market, but I think they burned a lot of young people that just thought it was like a game. They don't.
Yeah.
I tell my kids, you legally are an owner of these businesses. That is really cool. And I think a lot of people that are in the market, even right now today, don't know that when you're not just buying a ticker, it's not like a video game or some,
Yeah.
like a casino thing. No, you are a legal owner of that business. And I think that is just really cool, which is why I wanted to own PepsiCo, because I wanted them as a core position. And I'm sure I bought a share a week for 100 weeks. Really cool. I kind of miss it. I got a little bit of that, I don't know about addiction. I guess that was my guilty pleasure, was that one share a week. Just, for better or worse, I've had a feeling when I was buying it in the high 170s, that was high, but I just wanted to see what happened and just always be able to say I did it. And it's a company that I am comfortable owning. Like I always say, every business is a living, breathing entity, and they're going to do what they have to do to survive. So a lot of people shy away from Coke and PepsiCo because they say they're just soda companies and bad food and junk food, which of course, guilty is charged. But like Ramon LaGuardia said in PepsiCo's last earnings, is that non-sugar is king. That's what the consumer wants. They're not, some CEOs are, I thought of the Warren Buffett quote that, you should own a business that even a moron could run, because one day a moron will run it. But yeah, as far as PepsiCo, I mean, dude, 55% of their revenue comes from snacks, 45% from beverages, because I can public school math and do that. So it's really strong. They're evolving. They're getting healthier foods. They're trying to reduce sodium, sugar, saturated fats where they can. They're doing a lot of baked and not fried things. Just again, for the bubbly here, we got the bubbly. I mean, for this, I love it. I think it's great. I've convinced my daughters to drink that over soda. They still like soda, but I tell them, what, I'll buy the bubbly all week long. Just don't drink 10 of them a day. But companies are living, breathing entities, and the first order of any living, breathing entity is survival, and they're going to do what they have to do to survive. And we see this with so many companies, which like 3M, and they spun off their medical supplies business. I think it was I read that, what was it, Monday or Tuesday? Today's Wednesday.
Yeah, I think it was one of those days. Yeah, I haven't really looked at what exactly is going on with that, but I heard about it. So
yeah, so I didn't dig in too deep. But from what I understand is that they're selling off 80% of the medical supplies business. They're going to retain 20%. And then whatever that 80% looks like, I believe that we will receive cash for that as shareholders. I believe. And if anybody is watching and that's not right, please comment. We'd love to know. So that's cool. But why are they doing it? I didn't dig into that. I think they're seeing something for whatever reason, though. But they're going to get cash and they can, invest that, do whatever they want to do. I mean, so that's. I don't know how I got on this tangent, Frank, but
yeah, I think
yeah.
I think actually, what I want to add about the 3M thing is, I think that's generally, or I guess in general, doing something like that where you're going to spin off like a part of your business, especially for a company like 3M, I think that's like a really good move, because I just feel like sometimes with these big companies, a lot of people are like, well, look, this company is so diversified. This is so great. But it's like, well, we have all these different segments and you just don't really have as coherent of like a strategy. And kind of like we were talking about with the YouTube channel, like it's not as focused on like a specific thing. And so it's harder to just have a specific focus and goal. And so, yeah, I kind of like the spin-off idea most likely.
You don't have to beat around the bush. You can say AT&T.
I mean,
media.
I don't know.
That was bad. Like, but I think a lot of these businesses were still kind of, huffing the fumes of the Jack Welch GE, just buying everything. Like, hey, what's that over there? Buy it. We, medical, buy it. Was aviation, buy it. Whatever it is, like, bring it under the GE name. But it doesn't work. There has to be synergy. And we've seen this, right? I've lost track of how many spinoffs we've seen, like from Johnson & Johnson spinning off the consumer health, which is going to be at the end of 2023. There was, God, who else? Help me out. There
was Realty Income had like the offices.
With ONL, IBM had a spinoff of Kyndryl. There's another one I was thinking. GlaxoSmithKline spinning off their consumer health. And dude, I bet if it's in vogue, man. It's just what everybody's doing now, baby. You got to spin off. Everybody who's somebody in the stock market is spinning off. If you're not spinning off, you're behind the times. So get with it, PepsiCo. What are they spinning off next? Oh, fun fact with PepsiCo, and speaking of spinoffs, if I could interject real quick, if I could crowbar into my own conversation, is that PepsiCo used to have, they used to own Taco Bell, Pizza Hut, and Kentucky Fried Chicken. It better be. Yeah. So they own those three.
I know those three go together.
Yeah, under the Tricon. They spun them off into a company called Tricon in the mid 90s. I want to say 95 or 6 or 7, somewhere in the mid 90s. That's mid. And they spun it off because, again, like PepsiCo owning restaurant businesses, fast food. What is, they sell to it, which is cool because that selling part is what they baked in. So per the contract of them spinning it off, or the terms of the agreement is that for all time that Pizza Hut, KFC, and Taco Bell can only sell PepsiCo products, which is why everybody, like with PepsiCo or Taco Bell, you see the Baja Blast, the Mountain Dew, the Mitten Dew, as all the kids are calling it now. You see that in there. So that's contractual. So as long as those companies and those restaurants are around, PepsiCo is going to have a place, an outlet for a lot of their products, which is interesting. But yeah, so spinoffs, 3M spinning off. And anyway, I was going to say something else, but I don't remember.
Yeah, Ryan actually asked a little bit ago what your favorite dividend growth stock is. So
well, we just, for favorite, if I had to pick one, it's PepsiCo. I wish they were. So it was Johnson & Johnson. It was a close tie, but man, that they spinning off the consumer health. They're a pharmaceutical company pretty much right now. And that patent cliff is hitting. I know that like Stelara and a lot of their drugs are going to be losing competition to the biosimilars. And, I mean, still a phenomenal company, phenomenal. But from what I've heard, rumblings around the community is that Johnson & Johnson's pipeline isn't looking so hot as it once did. Now, maybe they'll make some acquisitions, but even if they do, now they're going to have to spend money to get those companies under their belt and go a little bit more into debt. But Johnson & Johnson is a close second, but I think there's a little bit more murkiness. And again, PepsiCo, just an easy business, so easy to understand, and they are everywhere. If competition pops up, they buy it, and they have their tentacles into like just everywhere. I see PepsiCo everywhere. So I'm going to say PepsiCo, and they just hit Dividend King status too this past year, which 50 years of consecutive dividend increases for Pep. Good old Pep.
Yeah, I think I definitely see that as well with Pepsi. Like, just a lot of room for growth, and I think there's a lot of sort of changing trends in kind of like the food industry, and I think they're kind of taking advantage of that, I would say, and are on the forefront to a certain degree and of that kind of shift. So.
Yeah, I mean, that's what's fun to watch though, right? Is we don't know what's going to happen. Nobody knows the future, not even the only Warren Buffett. Nobody knows the future. So it's really cool. And that's kind of like why it's almost like entertainment for me, like why we watch sports, because we don't know what's going to happen. We think we have an idea. Sometimes that happens, but a lot of times it doesn't. And I just love to see the shift in consumer demand, the shift in the market, and to see how these companies can respond and to navigate just not, like I said, not only changing consumer demand, but also just rising interest rates and going into inflationary or recessionary environments that we haven't seen in many, many years. And so far, PepsiCo's passing with flying colors. They're shrinkflation, right? They're raising prices. They're putting like 2 or 3 more less chips per bag. So you're going to have to pay more for less food, but people are doing it. So they're maintaining their profit margins pretty nicely. They haven't really gotten squeezed that much like a Clorox, where Clorox's margins are getting squeezed. And so far, they haven't really been able to pass that through to consumers. But I still like Clorox, and I think they'll eventually figure it out. But yeah, it's just fun, man. It's just fun. Investing should be fun.
Yeah.
I love it. And, I'm probably going to be talking about this till I die, which is really cool because, I mean, hell, I'm sitting in a chair right now. And as long as I got use of for now, until Tesla's Neuralink comes and Elon starts letting us communicate telepathically, and you can download things to your brain like the Matrix. I can do this. I can type. I can talk. Getting better. It's getting better every day.
Yeah, that's one thing I like about investing is it's kind of like you can do with it what you want, and you can be like super hands off if you want to, and or you can be more involved with it. And for me, it's just kind of like at this point, it's a great learning opportunity, I think. And I'm not gonna be making millions of dollars in like the next 2 years from my stock portfolio or anything, but it's a great learning opportunity. And for me at this point, it's just like a fun hobby, to just be learning about these companies and investing, and especially with the YouTube channel, just learning more, and making the videos really helps me learn more about investing, and just having the opportunity to talk to people like yourselves and other investors, and gain their insight and learn from them too. So
well, it's like they say,
super powerful.
Yeah, like they say, the best way to learn is to teach, So
Yeah.
In order to teach something, you got to learn it, which is pretty cool. And, when you were talking, you did remind me that you're going to lose. There's going to be losses. To everybody watching, there's going to be losses. You're going to lose money in the market. It is inevitable. But in the way you do it, the manner you do it, try not to repeat those mistakes if you make one, right? Because the first time it's a mistake, the second time it's a choice. But it's just a natural part of the stock market is you're going to lose money. And I mean, it's akin to wanting to breathe, but not expecting to exhale. Like it's just natural. You have to do it. So it's it's a learning. We're always learning. You know, Munger and Buffett and Manish Pabrai are always learning. Everybody is learning. And if you stop learning, then you should be dead, because I think that's sad if people stop learning things. And I hope to learn until the day I die. To, you know, tie that in my grandpa, always reading the paper. He was always watching the news and reading the paper, trying to learn something new. And the guy lived to 94. So that's what I hope to do too.
That's cool. We have another question from Steve. He asked about research sites. So I think that's a great question because, especially when I was getting started, like I didn't know what I was doing, and I think there's definitely a lot of great resources out there. So I guess we can both answer this. For me, I like Macro Trends. They have a lot of like super great historical data for a lot of companies, and yeah, there's a lot of good just data on like revenue and earnings, and you can really see like a longer term trend on stuff like that. So that's probably one of my favorites.
Yeah, there's a lot, man. Right now, the last year, and those that watch the channel know I've really been using Simply Safe Dividends a lot. And I guess I figured out a way to hack it. So while I'm not making a lot from the YouTube channel, it is $399 a year. I really, really enjoy Simply Safe Dividends. So I've used the YouTube money to pay for that, which is why I love sharing it and talking about things from it on the channel. Seeking Alpha, I really like. So those are probably my big two, is Seeking Alpha and Simply Safe Dividends. But I mean, there's so many great free ones like Yahoo Finance, obviously, finviz.com for just charts and researching, like where you can put in numbers and things. So anybody check out finviz.com, completely free. I really like finviz.com. And, you know, there's just so many. Jeremy from, if anybody's into REITs, from dividendstockpile.com, turned me on to allreits.com, but it's ALREITS, only one L, allreits.com, which is free. That looks really solid. But, you know, Seeking Alpha they offer a lot of interesting stuff for free. You know, they $150 a year, I think, by the way, is what they are. But yeah, if anyone hasn't checked out Finviz, check that out. And then, you know, Yahoo Finance. I don't know, man. There's a ton. There's a ton of different places to go.
I think Seeking Alpha has a lot of great info as well. But yeah.
MarketBeat.com.
Oh yeah, another one. They have some good information. I look at that. I actually have some kind of like scripts that do some stuff in my spreadsheets, and that's MarketBeat is like one of the only websites that I can take their data sort of and scrape it off. So that's like super nice.
You're gonna scrape it now. See, that's too advanced for me. Do I use my floppy disk for that? Do you know what floppy disks are? You know what a floppy disk is, right?
I think I've seen one, yeah.
God, don't say I think. You said enough. Why do I do this to myself? I must be masochistic.
I could not really describe to you how you like use it, or like, I don't know.
Yeah, it's basically like kind of where the information was stored. So I played Oregon Trail in fourth grade. In fourth grade, I played Oregon Trail. This was 1987. I played the Oregon Trail on an Apple IIe computer, and it was just everybody Google floppy disk when you're done with this. But it was like plastic, and it was floppy, man. You could flop it around, and you put it in the computer, and that's where all the data came from. And and pagers. So floppy disks and pagers were some things that I had from the back in the day. But
how much data do you get on a floppy disk? Like 8 megabytes or something?
Oh God, I have no idea. Probably less than that, because I remember there would be like 3 or 4 of them, and you'd get to a point in the game and it would stop, and you'd have to take that one out and put the next one in. So it probably wasn't a lot. I'm not a big technical guy. I never have been. I just liked playing like Sega Genesis, and I never had Nintendo. I had Sega Master System. This is really dating myself now. I mean, I don't know how many people here are going back to 1985, but Anyway, so floppy disks, man, that's where it's at. That's not where it's at. Oh, I saw one dude, Brad, man. Thanks for serving our country. You're welcome. And part of me feels like I don't know. I don't want to. I always feel like combat veterans, there's a tier. Like I always feel like I'm at the bottom tier because I went in at 18 and just did my time. And I was never, I don't know, I want to say in any real danger. I was in the Persian Gulf for 6 months in 97. And probably the most danger I was in was when I was on a snorkeling excursion in the Gulf of Oman and I smashed my ankle on a rock and the British guy that was running the like resort thing. I mean, it was just like, nobody's eating. It was a really bad hole in my ankle that shouldn't be there. So he took me to this little village and I remember him saying like, this was back before, that was the first time I ever heard Al Qaeda. He said, yeah, there's these groups like Al Qaeda and they control this village, so don't say anything about being in the military. It could be bad. So like, great.
Oh, geez.
Yeah. So it was really weird. Like, just being in a little village with goats and animals walking in and out of buildings. And the hospital facility I was in, there was no doors on it. And I survived, obviously. I'm here. You're here. And everywhere that we've been is not that as important as where we're going. And although we didn't know it, Frank, every decision, every choice we've ever made in our lives has led us to be here, right now, including everybody watching. And there has to be some purpose or grand meaning behind that. So that's my little philosophical 2 cents to just throw in there,
Well, I think it's interesting you brought up that comment because Brad is actually my dad.
Oh, geez.
So,
well, awesome.
I think that's great.
How old is your dad?
What?
What year was your dad born in?
1967.
Oh, okay. I was hoping that I wasn't older than your dad, so I'm happy. That makes me happy. Dad, made my night.
Yeah. Is there anything else you want to talk about?
Are you kidding me?
Any questions you have for me?
Yeah. Where are you from? And can you disclose that? Are you from parts unknown, or is there any like?
No, I'm originally from near Akron, Ohio. Right now I'm in Cincinnati. I'm going to school there. So.
Oh, Cincy. Yeah, we want to go to Cincy. We're planning on it. They have an Oktoberfest over there that we want to check out,
Okay.
And the Reds. Yeah. How long have you been investing? When did you start dividend investing? Or not just? I mean, I know you talk dividends, but investing in general.
Yeah, I mean, I guess technically speaking, I don't know, a while because my parents had like I forget what it's called. I think it's a UTMA. It's like a custodial account,
Yep.
which I didn't like. I didn't manage any of it, but I would like contribute some money there, and my mom would like put it in just a basic mutual fund. So I was like putting some money in there, and it was mostly just like my mom saying, "Hey, you have some money, let's put some in there or whatever." And I was like, "All right." I didn't really know what was going on too much. But then basically when I turned 18, I just wanted to, like, that's when you can, open an account for yourself. So that's when I got started. And I don't know, I obviously didn't know what I was doing at the beginning. Just buying random stuff and figuring it out. And then that was like in December of 2019. So that was like right before 2020. And probably like, I think right around when the stock market was crashing was just kind of when I was like discovering dividend stocks, I guess you could say.
Yep.
And so I wish I discovered it like maybe 6 months earlier. So I had like a better understanding and could take better advantage of that, but there would be more opportunities.
I'm hoping for another crash.
Yeah. And so, yeah, I just continued learning from there. And like you said, one of the things you talked about earlier was dividend growth. And that's definitely one of the most important things for me at this point in my portfolio. Just dividend growth and making sure that growth is sustainable for companies, because I have a super long-term focus, or just a long time for my portfolio to grow. So
Yeah, no, that's really interesting. And I would also say though, don't turn a blind eye to non-dividend stocks that can have a lot
Yeah,
of growth
yeah,
with your age. I mean, God, you have tons of time. That's awesome. And yeah, I just did a video on AT&T and T and Verizon, and they're not, I don't really think they're kind of like bond proxies that have a coupon that grows, but they're a little bit riskier than bonds. But I don't really see why somebody like you should own an AT&T or Verizon. I mean, if you do, that's cool, but I just think, man, there's so many other companies out there that have so much more
yeah,
growth potential ahead of them, where that's for old fuddy duddies, I think, is AT&T and T and Verizon. Like, there's really not going to be much growth there. They just pay that dividend. They have a lot of cash coming in, and kind of like a bond proxy. So, do you own? What is your favorite non-dividend stock? Do you have one?
I would probably just say, I guess Google. But so most of my, the majority of my investments are just in like broad market index funds, but I
Yeah,
don't really talk about that because one, it's boring, and two, it's just like there's not much going on there. Like you just kind of buy it and then you're kind of done with it. I mean, that's how it is for the stocks in my portfolio too, but um, there's just not much going on there. So I have the dividend portfolio, and then I do have some like growth stocks and
Mhm.
option stuff that I try to do, but you know, those are all kind of like learning opportunities. So I'm not worrying too much at this point about the returns. Like I'm certainly
Yeah,
trying to make money, and I am, making some money, but it's just like I'm not stressing about it or worrying about it because I know I'm learning a lot, and the amount of money that I'm going to be able to contribute, or the amount of money I'm contributing now is not very much compared to what I'm going to contribute in the future. So um, I think it's good to, I guess, have that time to learn without much risk, really. So that's kind of where
yeah.
I'm at.
Have you read the book 100 Baggers? Oh, I don't remember who it's by, but that was a really cool book on showing like some of the traits on how to find like a monster beverage,
Yeah.
companies that have really good growth potential that are still not quite discovered yet, I guess. And one thing that is really interesting is like high ownership by the company, like insiders. Like when insiders own a lot of the company, like that's a really good sign for a company that's young and growing. And that's one of the telltale signs. And then if they don't own their company,
Yeah.
that's not showing a lot of faith in the company that you own. But yeah, I would recommend that. Let's see if 100 Baggers book. I'll give the title
Yeah.
out here in a second. But
Honestly, I tried to like, read books regularly, and I generally do, but just recently I've just found the books I've been reading aren't really related to investing, and I definitely want to start reading some more investing related books. One of the ones I really enjoyed was Peter Lynch, One Up on Wall Street.
that's
That was really
that
good. And
that is good.
I think I probably read it like a year ago, and I feel like it would probably be I would probably learn a lot more just by like reading it again now and just having learned more over that year. So that was one I really liked.
I'm typing it. Well, I'm typing it too. Yeah, it's 100 Baggers
Christopher
stocks.
Meyer.
Yep, there you go. I
Okay.
got it. That's I can
Interesting.
stop typing. You guys beat me to it. Did you find it or did somebody?
I just looked it up.
Yeah, I enjoy that book. I bought the hard copy so I could underline things, and like I said, even though it's not about dividends, they do talk a little bit about them in there, and so companies that are established are the companies that pay dividends. Fantastic professor Aswath Damodaran. I always get his last name wrong. He had a chart that showed when companies start paying a dividend, when they initiate a dividend, they're basically admitting that they're done growing, and their earnings over the next 4 years drop by almost half. Just because they don't have that earnings trajectory where they're just earning crazy money. Like, so investors will start piling out, and income investors come in, but people that want that big growth start to file out and look for something else. So, that's Richest Man in Babylon from Jake. Dude, that was a book I read early on, really solid. And that is the
I don't think I've read that, but I definitely heard of it.
Oh, you haven't read Richest Man in Babylon?
I don't think so. I think it might be on my list.
Man. It's an easy read. It's a really easy read. I believe people have it on YouTube for free even. And it is definitely one of the books I love. Also, I really, really like the Warren Buffett and the Interpretation of Financial Statements. That is one of my go-tos. That's a book I have just all kinds of crazy lines all over that book. And there's a ton of books. There's a bunch of dividend investing books that, you could just, you could go to Google or Amazon and sort by ratings and whatnot. But those ones I would read definitely, Jake. I'm glad you're stoked to read that one. It's a fantastic book. Gets into a lot of the Charles. I forgot who wrote it. Not Clayton. It'll hit me at 3:00 in the morning. I'll wake up, startle my wife. But there's lots of books. So that's interesting, man. Google. I gotta say, I didn't know you were 20. I thought you were maybe like upper 20s. So that's just, I don't know. That might be a bad thing to say, but I don't know. That's not a bad thing to say.
No.
Right?
I don't think so.
Well, you got a lot to learn. You mentioned when something's boring and people don't want to hear about it. A, if you're investing and it's boring, that means you're probably doing it right. And B,
that's true.
In the wide, wonderful world of YouTube, and this is the tough nut I'm trying to figure out how to crack. If something's boring, I'm trying to pull the information from it that's useful and helpful and make that not boring, which that's a challenge in and of itself to make the boring not boring. But people do it. And man, just don't quit at it. Keep going, Just like Jake, be pumped about it. Pumped to talk to people. I'm always happy to talk to everybody here. Would you believe I'm an introvert? You'd probably never guess it.
I think my girlfriend tried to tell me I'm an introvert too. I don't know, but that's what she said.
I clam up when I'm around people I don't know. It's hard for me to break the ice and speak to them unless somebody wants to talk to me about dividend investing. So funny thing, maybe this is the subconscious coming out. I had my my sister-in-law. She makes shirts. She does a lot of this stuff. So she didn't make this shirt, which, by the way, I don't know where I'm going. Spatula City, open till midnight. They sell spatulas. That's all. Do you have any idea what Spatula City's from? You probably don't. Do you know who Weird Al Yankovic is?
I mean, I've heard of that person. I don't really know. No.
You're killing me, man. It was a comedy movie from the 80s, a bunch of stupid spoofs, and I saw it when I was a kid, and I love it. They have it's a store that all they do is sell spatulas, and they're open till midnight. You buy 10 spatulas, get the 11th for a penny, because anyway, damn it, I'm being stupid, silly. I forgot what I was going to say. What was I saying? I had some great point to make.
I don't know either.
It's gone into the ether. It's away.
Yeah.
And it's going to come back and hit me in the middle of the night. That's the problem. When these thoughts float away, they come back like a boomerang and I lose sleep.
Yeah.
Anyway, does anyone have any questions from the audience? Let's hear. I was going to say something good.
Yeah, I'm trying to think of what you were talking about.
Oh, well, that's okay. Well,
but one thing.
Yeah, go ahead.
One thing you were saying is like.
Oh, no, I got it. It came back. The shirts. So I'm going to German Fest in Milwaukee this weekend. If anybody's in the Milwaukee metro area and you're going to be at German Fest, stop by and say hello. Look for the guy wearing the black shirt with the white letters that says $PEP. So I'm having a PEP shirt made. So, and I have two others made. She made me a J&J one and a $LMT, which is Lockheed Martin. Big fan of Lockheed Martin. So I'm going to see if anybody notices it, because to the uninitiated, $PEP, nobody's going to know what that is. But, for those that are in the know, like us, you're going to, if some dude was wearing a $, PG shirt, I would have to walk up and say something, So we'll see.
Yeah, that'd be cool.
We'll see if that takes off. So yeah, look for the guy wearing the Pep shirt, which my kids will probably be trying to keep their distance from.
All right.
Oh, Steve. Be nice, Steve. He's young. Hey, I don't know the history of, I'm reading a book on Truman right now. Oh, by the way, for anybody that's still with us and still watching and they're not in a semi-coma right now, Hoopla or Libby are two great apps. I'm pretty partial to Hoopla right now. Is an app, and if you are in the United States and you have a library card, download the Hoopla app. You plug in your library card information. They walk you through it, and there's just a vast array of free books. You get 5 a month, 5 like credits they call them. You don't pay anything for it. It's free. It's through the library system. And I'm reading a book right now on Harry S. Truman, so it's probably the lengthiest book I've ever read. I think it's like 48 hours long worth of audio, but I do a lot of driving and working. So fantastic place for audiobooks that's completely free. Hoopla, everybody, check that out. And I cut you off. I'm sorry.
No, those are actually two. I've used both of those, and I'm listening to a book right now on Libby, Atomic Habits, which is really interesting.
Yes.
So.
Yes, that is a fantastic book. That's not James Clear, is it?
Yeah, it is.
There's a James Clear, yeah. Really good book. And I think he talks about Procter & Gamble in that book. I think because he talks about, it might be another book, but I think it was Atomic Habits. I think I'm probably confusing a book. Anyway, Procter & Gamble, they knew people had the habit of associating smells with cleanliness, so they spent a lot of money.
They just talked about that.
Yeah, I thought that was really cool that Procter & Gamble was like tapping into people's habits.
They went to Pakistan, and like people didn't have a lot of access to like soap and water for washing hands, so they like basically gave them this like soap that smelled good, and got them washing hands. And then they went back. They did this study for like a certain amount of time, and then they went back like 5 years later, and they had stopped giving them the soap, but they had gotten into this habit, and it was something they enjoyed, and it had like benefits, so they just kept getting soap, and the like hygiene was like way better in these communities because of that.
No, it wasn't Lifebuoy soap. I think Unilever owns Lifebuoy. But yeah, I don't remember that story. It's kind of coming to me now. It's a little fuzzy. But like I said, I read probably, upwards of 80 books a year, I would say. I mean, I'm always.
I wish I could get to that point.
Well, dude, this is, I guess, one of the things about the work I do. I leave the house at about 6:45, 7 o'clock in the morning, and some nights I don't get home until 6:30, and so I'm in a work truck. I have a work truck that I drive from job to job, and some jobs, like some days like today, I believe I spent close to 3.5 hours of drive time today, just driving. So I get a lot of time to listen to things. So that's why Libby and Hoopla have just been awesome, because I'm kind of cheap, cool. And I don't like Audible. I don't like that I get stuck with a book at the end of the month, and I necessarily might not read it ever again. So yeah. What did he say, Jake? Jake Tapper. He says Canopy is a movie and TV documentary. Canopy links library. Really? I did not know about it. Dude, this is why I love this community.
Yeah, exactly. That's cool. I'll have to look at that one too.
Canopy. All right, I'm Googling it so I can remember. Well, I'd like a question. Ask Frank or I a question, or I'll start asking him about his personal life if you guys don't. So K-A. All right, Canopy. All right, there it is. We're all set. We're plugged in with the Canopy. We'll play around
All
with
right,
that later.
great. Yeah, I'll look at that too for sure.
How
All
long
right,
have you been with your girlfriend for? We want to know too. Frank, inquiring minds want to know. We need to know this stuff. What salacious things? How long have you been?
About like a year and 2 months, I think.
You're already in trouble. She knows the exact day you met. You're already like a year and 2 months. That's okay. I forget my.
It's actually a year and 3 months. Sorry.
Hey, nice, man. And I have one more question. How did you meet her?
Just like on campus, just around. I guess.
You didn't meet on an
Nothing
app
really.
or on like Tinder or
No.
all those things? Yeah, I feel
No.
like I'm a dying breed because, like I said, tie it back in. I met my wife on a dance floor at 3:00 in the morning. People say that nothing good happens after midnight. Well, I guess I proved that wrong. And most people I know, even a lot of people my age, they meet on just these dating apps. And I've never had the pleasure of using that. I don't ever plan on doing that. And yeah, that's kind of cool to hear, man. That's pretty cool to hear.
Yeah. If you look right there, this painting, she painted that, which is awesome. Really like that
Nice.
painting.
It's like an old 70s, like
A Challenger, yeah.
yeah, Challenger. I was gonna say Charger, but well, you're wearing a Challenger shirt, man. You gave
Yeah,
a
I guess
clue
I
away.
am.
Yeah.
Yeah.
See, look at this guy. He's giving.
No, but
clues.
what you were saying about the apps, my cousin, she met her, who's now her husband on Tinder, I think. I don't know if it was Tinder, but somewhere on there, one of those online things. I don't know.
Yeah, part of me is jealous.
Interesting, but
Hey, this is coming from a guy that to meet girls, you either met them at school or in clubs or bars, and you had to walk up and actually talk to a
Yeah.
stranger in a public place. And it's usually how it happens. So part of me, like I said, as an introvert, is kind of jealous that these people just get to swipe left or right, or you get to like talk to somebody, Anyway, so if we could only invest in that. So look for that technology. The next dating, right? Recession proof things are dating, alcohol, tobacco, unfortunately, like a lot of comfort stuff, beauty products. People always spend money on beauty products, how to make money. People always want to know how to make money no matter what the market environment is. So those are some of the things that I think are recession proof. So there you go. If anybody looking for an idea for a business, you can plug it into the field of dating, because as long as there's people around, people are going to want to date. It's only natural. So
yeah.
Holy cow, dude. An hour and a half we've been on? Good Lord.
Yeah. Is there anything else we need to cover? I'm good.
Well, we could. I mean, we'll have to do it again, man, because,
Yeah, we can for sure.
This was too much about me. Now everybody's squared away on my backstory. And
well, that's what this is supposed to be about. It's supposed to be about you.
Yeah, because I mean, it's not like I guess we're not doing like my top 5 dividend stocks, so list countdown or something like that, like Casey Kasem. There's another old reference. He was a disc jockey that used to do the countdowns. Your dad knows who Casey Kasem is.
All right.
All right. Well, if nobody has anything to say, I guess you forever hold your peace.
Yeah. Hopefully we'll have you on again sometime, and I definitely appreciate you taking the time. Everyone, make sure to subscribe to Russ. I think I put the links in the description for his channel.
Yeah, Jake Tapper.
Check you out.
The Tap Man. He just said you're getting close to 1K. That's right.
Yeah, getting there. It's like you said, it's been a humbling experience and a slow process, but it's getting there for sure.
Well, let me tell you, I've learned a lot. Film Booth. Do you know the Film Booth channel on YouTube?
No.
Check out Film Booth and Video Creators and Think Media. Those 3 are and then there's one more, Channel Makers. I'll lump him in there too. So that's 4 channels that are fantastic for just free. Like some of them have different things you could buy in courses, but they tell you how to grow. They tell you just little things, tips and tricks. And I've been implementing a lot of different things. So it's a process, and it takes time, man. It takes time. So
just like investing.
You're right. You gotta, it'll compound, but you gotta start, and you gotta start putting that money away. And the gains are small at first, but then they'll eventually compound and grow. So, or you could just go and buy a bunch of bots and get yourself over the 1K. And I won't tell. Nobody cares. Nobody will tell until YouTube does a sweep and clears them all out. So
yeah. All right. Well, I had a good time this evening. Thanks for everyone for stopping by. Thanks for Russ for talking to us, and hopefully we will see you all soon.
Yeah, absolutely, man. Absolutely. Hey,
thank you.
Thank you, everybody.